A critical moment is fast approaching for the entire digital asset industry. More specifically, it is a moment that could define the future of XRP. The U.S. Senate Banking Committee is set to vote on the Clarity Act this Thursday, a piece of legislation that promises to finally end years of regulatory ambiguity. For investors and developers who have navigated the murky waters of crypto regulation, this vote is not just another headline. It represents a potential turning point, a line in the sand between the speculative early days and a future built on real-world utility. This is the moment where potential begins its transformation into tangible reality. The air in Washington is thick with anticipation. The Clarity Act, unveiled just after midnight on May 12, 2026, aims to provide a comprehensive market structure for digital assets. It seeks to answer the question that has plagued the space for a decade. Is a digital asset a security, a commodity, or something else entirely? The outcome of the committee vote on May 14 could set the legislative agenda for years to come, with the White House reportedly aiming for a signature by July 4th. The timeline is aggressive. A successful vote would send a powerful signal that the United States is ready to embrace financial innovation with clear, sensible rules. For XRP, the stakes could not be higher. The asset has been at the center of the regulatory storm, most notably through its long-running legal battle with the SEC. The Clarity Act offers a legislative seal of approval, a way to codify its status as a commodity, which was jointly affirmed by the SEC and CFTC on March 17, 2026. This would lock in its legal standing and prevent future administrations from reversing course. It would effectively close a chapter of uncertainty that has long suppressed its potential and open the door to a new era of adoption, particularly within the very financial institutions XRP was designed to serve. As we stand on the precipice of this decision, the market holds its breath. XRP's price, currently hovering around $1.45, reflects this tension, caught between the hope of regulatory freedom and the fear of further delays. If the bill stalls, it could be pushed back to 2030, a devastating blow for an industry moving at light speed. This is more than a simple legislative process. It is a high-stakes drama where the future of a multi-billion-dollar asset class hangs in the balance. The vote on Thursday is not an ending, but a beginning, one way or another. For years, the single greatest obstacle to the growth of digital assets in the United States has been a profound lack of regulatory clarity. Imagine trying to build a business where the fundamental rules of your industry could change overnight, based on a regulator's whim. This has been the reality for crypto projects. The ambiguity has created a chilling effect, forcing innovation offshore and leaving U.S. institutions hesitant to engage. Companies have operated under the constant threat of enforcement actions, unsure if their token would be retroactively declared an unregistered security. This environment has fostered speculation over substance, as long-term investment is difficult without predictable rules. The Clarity Act is designed to dispel these shadows. By creating distinct categories for digital assets and assigning regulatory oversight to the appropriate agencies, it provides a clear roadmap for the industry. A key provision, for example, is the protection it offers to decentralized finance software developers, ensuring they are not misclassified as money transmitters simply for writing code. This allows innovators to build without fear. It also addresses stablecoins, a cornerstone of the digital economy, though not without contention from traditional banking lobbies. The goal is to replace uncertainty with a stable foundation upon which a mature market can be built. XRP's journey perfectly illustrates the cost of this ambiguity. The lengthy and expensive lawsuit brought by the SEC cast a long shadow over the project, leading to its delisting from U.S. exchanges and sidelining institutional partners who could not tolerate the legal risk. Even after favorable court rulings and the eventual regulatory settlement, the lingering uncertainty has acted as a brake on its progress. Institutional adopters, particularly in the conservative banking sector, require absolute legal and regulatory certainty before integrating a new technology into their core operations. The Clarity Act would provide just that, removing the final barrier to entry for many U.S. financial players. This is why the act is considered a game changer. It isn't just about one project or one token, it's about legitimizing an entire asset class. For XRP, it would mean the narrative could finally and permanently shift from legal battles to its technological merits and use cases. It allows the conversation to move beyond courtroom speculation and into boardroom strategy sessions. Passing this bill would signal that digital assets are no longer a fringe experiment, but a recognized and integral part of the future financial system. It would be the green light the market has been waiting for. While many digital assets are still searching for a problem to solve, XRP was designed with a specific and massive one in mind: the friction in cross-border payments. The traditional system for sending money across the globe, which relies on a network of correspondent banks, is slow, expensive, and opaque. It can take days for a payment to settle, with fees being skimmed off at every step. XRP, in conjunction with the Ripple network, was created to be a bridge currency, enabling real-time, low-cost settlement for financial institutions. This is not a theoretical airdrop or a speculative meme. It is a practical solution aimed at the heart of global finance. What truly sets XRP apart from thousands of other cryptocurrencies is its focus on serving the existing financial system rather than trying to completely replace it. This pragmatic approach has led to years of building relationships with banks, payment providers, and regulators around the world. While other projects focused on disrupting the establishment, Ripple was working with it, demonstrating how its technology could improve efficiency and reduce costs within the current framework. This focus on enterprise-grade solutions and regulatory compliance has positioned XRP as a trusted partner for institutions looking to innovate, not revolt. This is a fundamental differentiator in a market often characterized by anti-establishment rhetoric. The architecture of the XRP ledger itself is built for this purpose. Unlike blockchains that use proof of work, which can be slow and energy-intensive, the XRP ledger uses a federated consensus mechanism. This allows it to settle transactions in just 3 to 5 seconds at a negligible cost, with the capacity to handle thousands of transactions per second. These are the performance metrics required by financial institutions that process immense volumes of payments daily. The technology is not just an idea, it has been tested and proven to be scalable, reliable, and efficient enough for the demanding world of international finance. This deep integration with the financial world makes the prospect of regulatory clarity particularly potent for XRP. While clarity benefits the entire crypto space, it uniquely unlocks XRP's core value proposition. A bank in the United States that was previously hesitant to use XRP for liquidity management due to legal risks would suddenly have a clear path to do so. The Clarity Act would not be creating a use case for XRP, it would be unleashing the one that has been patiently waiting for years. It allows XRP to step out from the shadow of regulatory limbo and into its intended role as a critical piece of financial infrastructure. One of the most telling indicators of an asset's maturation is the arrival of institutional capital. For XRP, this tide began to turn significantly following the legal clarity provided by the courts in July 2023, and it has been swelling ever since. The launch of Spot XRP Exchange-Traded Funds, or ETFs, in November 2025 was a landmark event, providing a regulated and accessible on-ramp for a wave of new investors. These are not retail speculators chasing daily price swings. These are wealth managers, family offices, and institutional funds making long-term strategic allocations. The proof is in the numbers. These ETFs have already attracted over $1.32 billion in cumulative net inflows. The flow of institutional money tells a story of growing confidence. In April 2026 alone, the 7 listed spot XRP ETFs saw net inflows of $81.59 million, bringing their total assets under management to a staggering $1.53 billion. This steady accumulation, even during periods of market consolidation, suggests that smart money sees value beyond the daily chart. They are investing in the thesis that XRP is poised to become a foundational asset in the next generation of finance. Analysts, like those at Standard Chartered, are even putting forth bold price targets, suggesting an $8 valuation is possible if ETF inflows continue to grow toward the $10 billion mark. Beyond direct investment through ETFs, institutional interest is also evident in the expansion of XRP's utility across the blockchain ecosystem. The recent launch of Wrapped XRP, or WXRP, on the high-performance Solana blockchain is a significant development. This move opens up new avenues for XRP to be used within the burgeoning world of decentralized finance, or DeFi, allowing it to be used as collateral for lending, borrowing, and trading on new platforms. It enhances XRP's liquidity and interoperability, making it a more versatile and attractive asset for sophisticated traders and DeFi protocols alike, further weaving it into the fabric of the broader digital economy. These signs are impossible to ignore. They represent a fundamental shift in perception. For years, XRP was viewed by many in traditional finance as a toxic or risky asset due to its regulatory battles. Now, it is being integrated into regulated investment products and cutting-edge DeFi markets. The passage of the Clarity Act would be pure accelerant on this fire. It would give the most conservative institutions, the large pension funds, the sovereign wealth funds, and the major U.S. banks, the final regulatory assurance they need. The institutional tide is already coming in. Clarity would open the floodgates. We are on the cusp of a major evolution in finance, driven by the concept of tokenization. This is the process of creating a digital representation of a real-world asset, or RWA, on a blockchain. Think of tokenizing everything from currencies and stocks to bonds, real estate, and even carbon credits. The benefits are immense. Transactions become faster, cheaper, and more transparent, while fractional ownership opens up previously illiquid markets to a global pool of investors. Financial institutions are no longer just exploring this, they are actively building tokenized settlement systems to revolutionize how value is moved and managed. This is the future, and it requires a neutral, efficient bridge to connect it all. This is where XRP and the XRP ledger are uniquely positioned to play a pivotal role. With its proven speed, low cost, and scalability, the ledger is an ideal platform to act as a settlement layer and bridge between different tokenized assets. Imagine a world where a tokenized US dollar can be seamlessly exchanged for a tokenized Japanese yen, or where a fraction of a commercial real estate property in New York can be instantly settled against tokenized corporate bonds. XRP can serve as the intermediary asset in these transactions, providing the on-demand liquidity needed to connect these disparate systems. With regulatory clarity, it becomes the trusted linchpin in this new financial architecture. The timing of this moment cannot be overstated. The Clarity Act's potential passage coincides perfectly with this rising wave of institutional tokenization projects. The technology is maturing just as the regulatory framework is solidifying. For investors, this convergence creates a unique window of opportunity. The market often moves in stages, pricing in events before they happen. However, the full impact of widespread institutional adoption and integration into real-world banking systems is something that unfolds over months and years, not days. The shift from a market driven by speculation to one driven by utility is a process, and we are witnessing its critical inflection point. Ultimately, while no outcome in any market is ever guaranteed, the evidence points toward a profound transformation for XRP. The narrative is undeniably shifting from speculative trading to its foundational purpose as financial infrastructure. The Clarity Act is the catalyst that could formalize this transition, removing the last major obstacle for U.S. institutions. This is more than just a vote on a bill. It is a signal that the world's largest economy is ready to build the next generation of finance on blockchain rails. For those who have watched XRP's long journey, this moment feels less like an ending and more like the real beginning.